Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to cover what we should expect with the McClellan oscillator up at some of the highest levels we've seen in quite some time, combined with the fact that we got a negative day in the SPYs and the IWMs and somewhat with the Qs. So before I go into that, just want to make sure that if you're just finding us on YouTube, please make sure to subscribe to our channel, and also make sure that you know that we've got more videos just like this at marketgauge.com/tutorials, and we also have the indicators that you're looking at right here for free at that same location. So let's dive into it. Now, the indicator that I want to draw your attention to here today is really the McClellan oscillator. Okay, this is an oscillator of advances and declines, and it's used to identify when markets are uptrending in terms of their market breadth and downtrending and when they're rolling over, or I should say overbought or potentially oversold. Now, an extreme overbought or oversold level would be right up here around the 250 mark, and then what we look for is for it to move over there and then start to head down. Now, the thing with a market breadth indicator is that, number one, coming off of a significant market bottom, the first thing you want to see, or I want to see, is the market to get overbought. That demonstrates that you've got more strength in the market as opposed to weakness. And very often, an initial overbought reading can be a positive that will indicate that the market will continue to grind its way higher. So with that caveat, this isn't the most bearish indications that we could have. That said, the market is overbought, and as I'll cover in a second, we've got a negative pattern in the SPYs today, and it's right up against the critical price level, or a level that has been critical over the last year just about, not to mention just under its 200-day moving average. So if there was a place for us to expect that the SPYs would roll over, even if it was only to come back and retest the 50-day moving average, this magenta line, this would be it. Now, the reason, as I said a second ago, to highlight this today, right, because the McClellan oscillator actually has been over this oversold line, as well as our 5-day 5-day up-down volume number up at the top, as well as our 10-day advanced decline number down below. All of them have been pushing into overbought territories, but they've been that way for 3 or 4 days. Today, I'm focused on it because we finally got a day where the market closed below the prior day's low. So the next thing I would look for is a move below today's low in a substantial way. Not just a few ticks, about quarter, 25% of an average range below that low would then start to be a warning. Now, the green line here is the 10-day moving average, so that could be some support. The overriding theme here is that if markets continue to go lower tomorrow, I'd let them go lower, and I'd let them go lower until we get a reversal to the upside. And that is primarily because we have reached this overbought area. So let's just take a look at a little more history so I can give you some perspective on what I'm saying. So if you take a look at the McClellan, and we'll focus on the McClellan here, you can see that we had a situation where it was this high at least in the New York index after this pretty sharp rally here, and all that led to was a consolidation before it went higher still. All right, so that said, here would have been your reversal, and you're right back into it. So no harm in getting a little cautious there. You just had to be quick to get back in. Then we have to go all the way back to October of 2014, where we see the same type of thing. The market got overbought here, but what you'll notice here is that the market closed lower, but never followed through on the downside. So what I'm telling you to watch out for tomorrow is follow through on the downside. If we don't get that, then just know that you've got this McClellan that's overbought, which can work its way off, work its way down lower without the market selling off. So that's a combination of price going down and the McClellan staying higher. All right, let's go back just a little bit further. And you'll see I had a situation right in here where the McClellan was significantly overbought. That lined up really nicely with this high, but again, here's a situation where we were at a high, not coming off a significant low, and once the market started to move lower, it continued to move lower. So that's the kind of action we would look out for. Let's take a look back. Here's a modest or less aggressive overbought reading, and you can see that the market really doesn't roll over, but once it starts to roll over from that overbought area, it continues to roll over. Another indication in here, you can see that the market doesn't roll over. Once it does roll over, however, the McClellan, which has already started on its way down, is coming from an overbought area, and you want to respect it. So you get the idea. And if you would like to see this on the NASDAQ charts as well, again, you can go to marketgauge.com/tutorials. That will take you to our blog area, and from the blog area you can click on market internals, and in the market internals section you'll see we've got a number of different charts that will help you with market internals. The ones that I was just focused on are these NYSE advanced declines, so you can see you can get them for NASDAQ too, as well as some other market internals that will help you better time which way the market may go. But in closing, the market's just come off a major low. It seems like it's running out of steam. It seems like it's a little bit overbought, and you got to make sure that you pay attention to the price action of the underlying indexes. Don't trade the indicators, trade the indexes. Make sure that we follow through on the downside before you count this rally over. Hope that helps, and I'll see you in the next video.